This is the Business Stuff Podcast. This is where I will share the lessons I've learned from advising thousands of businesses over almost 30 years. Each episode will give you practical insight to allow you to learn from other people's mistakes. I'll be pulling in experts from our team and the world of business, and together we'll make sure your business is giving you what you want. My name is Martin, and this is the Business Stuff Podcast. Hi, it's Martin here from the Accelerator team, and I'm here with Liam Crowe, one of the managers from our Audit team. Hi Liam, how are you doing?
I'm good.
Good. And we're going to talk about charity accounts, trustees' obligations, how they're different to normal accounts, those kinds of things. So, hi Liam, tell us a little bit more about what you do first of all.
So I've worked here 10 years this month.
Well done.
Know, thank you.
Solid.
I know it's been a tough 10 years to be fair. But
Yeah,
qualified about 2 years ago now. Was made manager a couple of years ago as well, and gone pretty well.
Good.
So I've now
And you work in our audit team doing what?
Mainly charities. I do enjoy the charity side of things. Feels like making a difference. It's always a nice thing. It's also good because trustees, you do tend to find that they do it to volunteer rather than knowing a lot about accounting. So it's good to feel like you're making a difference to them, getting them
Helping
to understand.
them make their difference.
Exactly,
It's like paying it forward kind of thing.
Exactly,
isn't it?
yeah.
So the reason we thought this was worth talking about then is a lot of trustees, first of all, the informal nature of a lot of these things. They don't realise that they're actually committing to some fairly serious things if this all goes wrong.
I think
because they're at risk, aren't they?
Exactly. I think that's where the structure of the charity comes into play a lot. So there's probably three main types of structure for a charity. The first one, as a lot of people will probably know, is you've got the charitable company, so limited by guarantee. So that tends to be when the charity itself is a legal entity so it's got its own legal requirements and the trustees have limited liability. The only difficulty with that is there's a lot more filing, there's a lot more reporting requirements. That we'll touch on a bit later. But
so there's a trade-off, isn't there? You get some protections, but those protections have an admin cost.
Exactly.
Yeah.
So all charities file to Charities Commission, but with a charitable company, you also have to file at Companies House, which is essentially double the work.
It's just another whole load of
Exactly. So there's also another one, which is unincorporated.
This is the next main type of structure.
The next main type is unincorporated charity.
Just what does unincorporated mean then? So this is not a company. So this could be you could be doing it in your own right.
Exactly. Yeah.
Or you and a couple
So I
of
could
mates
set up a charity with a couple of friends.
And it doesn't have to be a company. It's an organisation, but it's not a legal company.
So you don't have to file at Companies House, it's completely separate, but you still are bound to Charities Commission. And
it's still rules that apply to all charity fundraising and Okay.
So, but the only difference with that is the trustees don't have the limited liability that they do with a company.
So they're not protected.
Yeah. So things like if you employ staff, if you set up contracts, it has to be in your own name, which means that you're liable for...
So if you rent premises on a 5-year lease...
It's in your name.
You've got to pay the rent. If the charity doesn't pay the rent, you've got to pay the rent. Because you are the charity to some degree. There's no separation.
Exactly. So that's where it gets a bit worrying if you're a trustee. So if you don't have those things, it's absolutely fine. I think there's no harm in setting up an unincorporated charity if you're not going to employ staff or have property or rent.
But you've got to remember here as well, I presume you could also get sued for something. So you should always have insurance for all the things you do anyway.
Good point.
And make sure the insurance covers you, no matter what your structure. Mm-hmm. But if they fail and there's not enough in the pot to pay out the liability, whether it's a broken leg on a bouncy castle, or it's the rent for the premises, or someone sues you for, constructive dismissal or whatever, all of those things can come back and hit you as a trustee, and it's the trustee who bears the cost, not the treasurer, not the manager in the shop who sacked the person and they shouldn't have done.
That's right. It's the trustee.
The buck stops at the top, and the top here is the trustee.
Exactly.
Right. Okay.
So that's why in September 2018, a new type of charity structure was set up.
Right.
Called a Charitable Incorporated Organisation, so a CIO. So this was set up to give trustees limited liability, but also they don't have to file at Companies House.
So it's kind of taking some of the best of both.
Exactly.
You've got the admin ease on one hand without taking on all the debt and the bills.
Exactly.
Perfect. So that's only been in what, 4 years?
4 years now. So it was estimated that quite a lot of the charities would go from unincorporated to CIO, but it's not actually turned out that way. It tends
Is that because nobody knows anything about it?
Pretty much. So it was
because who would tell people about
exactly.
it?
So as Robson Laidler, we started telling people about it. A few charities have moved over.
Yeah.
And it just gives those trustees an extra
It's just protection.
That's it.
It's all about guarding your stuff, isn't it?
Exactly. Yeah.
Because I suspect, I don't know, you know more trustees than me. The trustees I do know they tend to be people that are in business, or they've been successful at something.
Yeah.
They want to do well for other people. They want to pay forward, help out. Yeah, I'll be a trustee. I'll help any way I can.
Yeah.
You don't realise it's not like being a volunteer in your local Oxfam, where you go in and you've done your day and you go away. You're actually taking on a lot of stuff.
Yeah,
and I know we've talked about that, but I don't think everyone realises that, do they?
I think it's a bigger deal than people realise. There's a lot of liability, especially if you're not incorporated, that like you said before, the buck stops at them. And I think sometimes they think they're making a difference without understanding what is involved with being a trustee.
Well, we're not trying to put people off here, we're just trying to make sure people can ask the right questions.
Definitely not.
If you get asked to be a trustee, yes, but let's get some advice.
Exactly.
Because it isn't one of those things either where if you sign commercial premises or you're employing people and you have to let them all go, they won't just go, Liam, I'll let you off. I know you were just a trustee trying to do the right thing. They'll go, Liam's got some stuff. We'll have his stuff.
That's the thing, yeah.
Yeah, everything's fine while everything's working. As soon as it falls apart, though, people turn and don't.
That's when it happens.
And, these, commercial landlords, HMRC, if you owe payroll debt, they'll still want their money.
Yeah.
It doesn't matter whether if you're doing something good or bad, they'll want their money. So we've talked about the structures there, and then 3 main structures.
Yeah.
What ignoring the new, what was it, CIO? Ignoring the CIO, then what's the majority of people, companies or unincorporated? Would you say?
It depends on the size. I think generally I would say most are companies, just obviously with a limited liability, and most charities do tend to employ staff, so they want that extra liability.
Yeah. So the worst case scenario here is if you're not a company and you're not a CIO, if you're an unincorporated with things like leases in your name and long-term contracts and bills and employees, this is the wake-up call to say you do realise you're at risk.
I would say so, yeah. If the trustees are worried about that, then it's a good time to become a CIO.
Is that an easy transition?
All it is a process of closing the unincorporated charity at a certain date and setting up a CIO. So it's just not hassle, but a bit more admin
There's
work.
a bit of admin, but it's worth it to keep your house.
Exactly, yeah.
And do you have to then renegotiate all your contracts and that then, would you, Liam? Because in theory, your current contracts are with you as a person. You're asking them to then sign up for a new contract and possibly not get paid.
Yeah.
So I presume you've got to
you would have to
actually swap. You can't just say, oh no, we're a CIO now.
This is where it's important, if you are thinking about employing staff, maybe moving before you moving on to a CIO before employing staff.
Because you can't wash your hands, because this is the first you've heard about it.
Yeah.
Okay. Yeah. So we talked about the structure quite a bit. You mentioned earlier about reporting and how all charities have to report to the Charity Commission.
Yeah.
But there's additional work for the company side.
Yeah.
And I suppose I'll just get the disclaimer out. If you've got a payroll, you've got to do a payroll. If you're VAT registered, you've got to do a VAT return. All of those things they don't change here, do they? No. It's just what you've got to report to Companies House.
That's right. So for a charitable company, CIOs, even though they're incorporated, you don't have to file anything at Companies House.
That's what they were designed for.
That's what they were for. Charitable companies, you have to file accounts and confirmation statements at Companies House still, as you would a company.
The same as any other business.
Same as any other business, yeah. So the difference is with unincorporated charities is you don't have to file anything at Companies House. It's all Charities Commission.
Yeah.
Depending on the size of the income, it depends on what you file at Charities Commission. So,
but that's not a structure-based thing.
No, it's not. That's just
so
general.
Once you're a charity, there's different reporting.
Yeah, right, depending on the size of the income, whether that's a company or an incorporated.
And I presume this is to filter out big and small, loosely. Yeah. What does big mean in these terms?
So a big charity is any income over £500,000.
Right.
So that's classed as a large charity. So there's a bit of extra accounting policies and requirements that needs to go in. But for an audit, it's any income over £1 million.
So we'll come on to what an audit is, or should we just do it now? We'll do it now, because as well as your reporting requirements, there is also this independence part which comes in. Because if you're the treasurer of your own charity, you can't just submit everything and just have no oversight.
Yeah.
There has to be oversight, isn't there?
So for any charities with income over £25,000, there needs to be an independent exam.
So that's actually quite a low threshold,
isn't it? It's really low, yeah. So
because when you said 500 before for the reporting, I was thinking, I'm sure there was a 25.
Yeah. So
as soon as it's over 25, you have to have an external audit?
No, an independent exam.
Sorry.
So anything over £1 million is an audit. So an independent exam is income £25,000 to 999,999.
And $1 million plus is an audit.
Yeah.
Right. So people below 25 grand, you've shook some tins. That might sound derogatory. I don't mean it, but you've done whatever you've done to get your 24 grand in. Yeah. You can fill your own reports in, send it off.
Send it to Charities Commission.
You've done it. I mean, they've always got the right to presumably get more info.
Yeah.
They can look into it, but you're done. Hit 25 grand, you need an independent exam.
Yeah. So basically,
hit $1 million, you need an audit.
Yeah, that's right. So an independent exam is you essentially just they have to be a third party, so someone independent to the charity.
Unconnected. Not your sister, not your spouse.
No, correct. So what they're reporting is whether that the accounting records have been kept correctly, that the accounts match the documentation provided. It's very simplistic terms. So an audit is required once we hit £1 million. There's also another way where if it's over £250,000 but gross assets are £3.26 million.
So there's quite a few little thresholds there.
There's two different thresholds, but essentially the main one would be income over £1 million. So once it hits that...
So this independent exam then, again, if you're a charity with, a couple of £100 worth of turnover, someone might go and sign that off. It's like, you need to know what you're signing off here. Because I presume if you're the independent examiner here, you're taking on the risk then, are you?
Exactly, yeah. So that's why we always suggest going to... Obviously, come to Robson Laidler, but
to someone who actually knows what they're doing and understands the risk.
That's the thing, yeah.
Because the danger is you might think, I need someone to sign this off. So if your mate says, go on, sign me charity accounts off, you really shouldn't.
Shouldn't, please don't. Please don't.
Probably no more than you should see. You'll be a trustee without knowing what's going on as well.
Yeah. I think the main thing with charities is that a lot of charities get grants from funders who like to look at the accounts. So if when it's an independent exam, they can trust that the accounts have been prepared.
Because they're taking a view to make sure that it's not just going to disappear and buy someone a car.
So they want the money that they're given to charity to be used on charitable
to go to the beneficiaries of the charity. Yes. Okay. Then. So we've talked about the external audits. Then there's three thresholds. There's nothing. 25 up to $1 million is independent, then audit. Audit, we did an episode on what an audit was 3 or 4 weeks ago now. Andrea and Jack did one. Is there much difference in the way the accounts are presented in an audit for a charity?
I think
is it much the same as
the audit itself is pretty similar to a company audit. I think the testing is pretty similar. There's just more work involved. It's testing controls, making sure charities are using the funds correctly. I think that's probably the only difference. Right. But there are other things that, as auditors, we need to make sure.
All right, so the audit's not that much different, but it's sufficiently different that it shouldn't just be anyone who audits companies all day. You still need to know the difference if you're auditing a
exactly,
charity.
yeah.
Okay, then. There's quite a few other differences as well, though, isn't there, Liam, when you're doing, see, your accounts and you. So again, a trustee might have came from the world of business, and they might know how you report income in a normal set of accounts.
Yeah.
But there's some differences, isn't there, for charities?
Yeah, I think the main one that trustees tend to get a bit funny over, really, because sometimes they have a lot of company background, is when it comes to income recognition. So income recognition is obviously recognising income to make sure it's in the right period at the right amount, and it tends to get a bit odd when it comes to grant funding. So, for example, if a charity receives a 3-year grant, if you're talking about companies, they tend to defer it over those 3 years.
So we'll go into this then. So if we've got a calendar year end, January to December, and if I get 3 years worth of money to do a contract as a business, and I get it on the 1st of January, in those accounts I would put 12 months worth. I would defer, and I would put another 12 months worth, then another 12 months. And that's the same as paying tax and all the money when I haven't really earned it yet. Is that a way to put it?
Yeah, that's a good point.
Charities, though, let's say we've got a December year end, I get all 3 years worth of money on the 1st of January. Are you saying I just put all that straight in that year's?
Depending on what the grant letter stipulates.
Right.
A lot of the time you do have to recognise it in full as at the date the grant letter is received or signed.
So once you know you're getting the money, basically.
Yeah. Unless it's... So some grant letters stipulate that year 1 you're able 50 grand, year 2 100, year 3 150.
But it might just say 3-year deal at 400 grand.
Exactly. And if that's the case, you have to recognise the £400,000 in full.
Now, from the world of business, then again, your trustee may go, well, I don't want to pay tax on this up front, but there's no tax here on charities anyways.
There's no tax. So charity-wise,
it doesn't matter whether the recognition, the timing almost doesn't matter from a tax perspective. Yeah. But if you get it wrong, it's still wrong, isn't it?
Yeah. I think the thing that looks funny is that charity accounts will be different year on year, because you'll have £400,000 worth of income
and then nothing for 2 years.
Nothing, but you'll see the expenditure. So you might see a huge surplus.
You'll think the fundraising has been a disaster. Why have you not got any money in?
But in reality, it's because the way you recognise the grant over those
years. Correctly. Because if anything, if you are looking at a charity, you go, that's a bit unusual. I know they get grants. Why is it? If anything, that would trigger the opposite alarm to someone who knows how this works.
And this is where it's important when you do your trustees report to make sure that it's appropriately written in to say that in this year we received grant funding from X for this amount, and then next year you can say we had this amount of income recognised in the previous year, and this is why expenditure was X amount.
That's why expenditure is way higher than income shown, but we've already got that money in last year. Right, okay then. Well, you bring us on to probably one of the last things probably worth talking about then is the fact that there needs to be a report that goes with it. Yeah. So if anyone's got shares in, any big PLCs, they'll see executive reports that go to shareholders, etc. What's the difference here, though? Who's this report for and by? Who writes it and who's it for?
So the main report is called the Trustees Report. So this is written by the trustees, and
they take responsibility for this.
Exactly.
Yeah. So if you are a trustee, make sure you're happy for this to be what you're actually saying.
Yeah. And then, so the idea of the Trustees Report is to talk about the figures in the year, what your aims and objectives of the charity is, how has the income, how have you helped the beneficiaries, how much income you received, how much expenditure. And the main part of it, which Charities Commission have actually pointed out, is the reserves policy. So
can you explain what reserves are for people then?
So the reserves...
Because trustees watching this might not know what reserves are. Or presenters might want to refresh you on what reserves are.
So reserves are the amount of money that the charity holds as at the end of the year. So if it's the 31st of December year end, the amount of money owed, like the charity has as at that date, is the reserve.
So your cash reserve, your pot of money, not cash, but the amount of money you've got available.
Yeah.
Yeah, okay then.
So this is when we come to free reserves. So free reserves is probably the most important thing to look at if you're a charity or a trustee.
Within the report?
Within the report. So free reserves is essentially the amount of money freely available to spend by the charity.
Right.
So when we talk about reserves, we've got unrestricted reserves and restricted reserves.
Right, okay then.
So restricted reserves tend to be are reserves that, say if you've got a grant from a funder where they say you must spend this money on X.
So money for a specific purpose,
yeah.
They're restricted because they can only be used for
that purpose, yeah.
So you can't pay your general overheads, you can't,
exactly.
can't bonus your team or
yeah. So you have to recognise that separately.
Right.
So when we talk about free reserves, we're only looking at unrestricted reserves, which is money that you can spend freely as you wish.
It's not it doesn't have a stipulated use.
Exactly, yeah. So when it comes to free reserves, it's unrestricted reserves, but you take out your fixed asset amount, because fixed assets, all the money is tied up within the fixed assets.
So again, we might be losing people on accountancy speak here then. So can you give us a simple example of what you mean by that?
So a fixed asset can be things like your desks or a motor vehicle or a van.
Yeah. Okay.
So it's things
that has a value and you've still got it, but you can't distribute that because it's not money.
Exactly, yeah.
Okay then.
So if you take your unrestricted reserves at the end of the year, you take away your fixed assets value.
So I've got 100 grand's worth of stuff, 30's allocated, 20's a van, I've got 50 grand of cash in the bank I can do what I want
that you can
with.
spend.
That's your free, is that what
free
you mean?
Reserves, yeah.
Okay.
So when you look at your free reserves, it's important to compare that to what you think your reserves policy is. So a reserves policy is what you want to have in the funds in your charity just on a rainy day, just in case something comes up.
So if
just
no
as
more
a
money
bit
comes
of a backup,
in,
yeah.
And what do you normally say about that? This is the amount we've got and this is why we've got it,
so,
or how long it's going to last?
So a common reserves policy is 3 to 6 months worth of expenditure, but it's important to compare that to what you've actually got in the accounts.
Right. So if you're sitting on this 50 grand in my example,
but
you don't really have any overheads, well then you might be sitting on 10 years worth of...
Exactly, yeah.
And that might sound like something that doesn't matter then, but who would pull that up?
I think recently Charities Commission have actually done a survey and they've looked into a lot of charities and they found that only 1 in 5 have been using a reserves policy correctly, which...
So 4 in 5 charities are misquoting what they've got reserves for.
Yeah.
And some of these numbers are presumably pretty big.
There will be, yeah. It was a mixture. It was mainly large charities that they were looking at as well. So a lot of large charities were incorrectly putting a reserves policy. It doesn't affect the accounts, the figures themselves. It's the Trustees Report. But it's important to make sure the reserves policy is correct.
Because what's the impact on the ground here then, Liam? You know, if we're saying to you, well, we need some money to help deliver stuff, and if I was looking, I'd say, well, you've said you've got no money, but I've looked and you've got, 50 grand in the bank, and you've got no overheads. Well, to me, it doesn't look like you need some money then.
And
is it just that it casts a bit of doubt in the mind of other people? Do I go
think
if you've got that wrong, what else have you got wrong? Is it that kind of thing?
Yeah, I think the main thing is when you're looking at funders and people trying to get money into the charity. If the charity looks at your unrestricted reserves of your reserves of 100,000, but you've got unrestricted free reserves of 50,000, then mention that as in your reserves policy is X amount, but it's higher than what you want it to be. Explain why. So during COVID, so during COVID, we saw a lot of charities receiving thousands of pounds worth of grants. And that's something to mention in the reserves policy, because you would likely find that the reserves will be higher than what they wanted it to be, just because they've received so many.
It's not a problem. You can say, we now sit on 9 months worth, but don't say 3 months if you've got.
If it's not 3 months.
So it's just about making sure you're stating the actual, the reality of what it is.
I think
it's not. It's no one's trying to deceive anyone.
Not at all. Not at all. Like I said before, it's always good to get your accounts right, and
it helps,
which is the main thing. But
again, if you're the trustee here, because I'm always thinking here, well, again, one of the purposes of this is kind of advice for trustees, is what we're talking about here. If you're a trustee and you're reading stuff like that, and you don't know what it means, but you can see that it's wrong, that always makes me think, well, it might not be that important, but if that's wrong, it's quite an easy thing to get right.
Yeah.
What else? It's
because funnily enough, that's the first thing that people, when you open the accounts, the Trustees Report is the first.
So you start
but
there.
It's
so if you're open as wrong, it's
yeah.
like, yeah. Okay.
And then when you come to the reserves policy, if it's incorrect, like you said, they might think, oh, what's going to come? What am I going to see as a?
Because I get asked from people all the time about small things. I'll say, no, you need to get this right. We'll put it right. Oh, it's tiny. Who'll care? And it's like, well, HMRC will care because you're not paying the right tax. All right, okay then. I mean, that's not the stake here, but I then go, and if you let them get in on something small, they won't care if it was just one small thing and that's the only thing. They'll go through everything. Once they've got your stuff, they're looking at it. And again, that's something that if I was dishing out money to charities, I would go, well, they're not even getting that right.
Is it? Completely agree. It's a really good point.
They're telling me they need 9 months worth of money, but
I think but
they're sitting on it.
Something else to consider is that the funders often, they've received so many different applications, they probably don't want to have to work out the free reserves themselves by looking at the balance sheet, looking at the SOFA, when they can go to the reserves policy, free reserves is this.
Just make your life easier. If you're trying to get money, don't shoot yourself.
It's just a little paragraph, that's all you need, that explains why it's that level when your reserves policy states it should be at this level. Yeah.
We normally finish these things, Liam, by just saying what's the one thing that everyone's getting wrong. It sounds like the Charity Commission have told you that 4 out of 5 are getting that wrong. Is there something else that you can offer in and go, this is something that they're also getting wrong, or what's your parting tip for charity trustees?
I think my main tip for charity trustees is just to ensure that income is recognised correctly, whether it's unrestricted, restricted, and make sure you keep all the grant letters you receive. Because a lot of the time we've gone to audit, we want to make sure we've recognised the income correctly and no one can find them.
So they kind of go, we've got the money in, right? Just burn it all.
Pretty much, yeah.
Well, do you not care?
Yeah. So
does that happen?
It's happened a few times.
We've got the money,
well,
but what's it for?
Yeah, pretty much. So keep your grant letters and we'll be happy.
Yeah. And if you're a trustee, make sure you actually know what's going on. Yeah. It's not a passive role, and if you want to just help the charity, be a volunteer.
Yeah.
Trustee is it's an important title.
It's an important role because it's a trustee's role to strategy, making sure that charity's helping the beneficiaries, but it's also a really fun role. I'm trustee for a charity and I absolutely love it.
It sounds fun. The last 30 minutes have been riveting.
Ignore the 30 minutes, but
but the rest of it's fun, isn't it?
It's fun role because you're helping people, but it's also important to understand that you can be liable to some things, but
that's when the fun stops. I would imagine, isn't it?
That's when it stops.
When someone tries to get your house off you.
Yeah. That won't be nice.
Well, thank you very much, Liam. I really appreciate your time. I hope that's been useful for anyone in the charity sector, whether you're a trustee, a volunteer, treasurer, or anybody else. Hopefully there's been something there for you. As always, we appreciate your feedback. We would love to see your comments. Any questions, I'm sure Liam will be happy to have a chat. And until next episode, we'll see you.